Today on Inside the Issues, I speak with Olaf Weber on the subject of sustainability codes of conduct and green banking. Hello and welcome to this week's edition of Inside the Issues, a CIGI Online podcast. My name is Dr. Andrew Thompson. I'm an adjunct assistant professor of political science at the University of Waterloo and senior fellow here at the Centre for International Governance Innovation. Every week we're joined by an expert in global governance or international public policy, and today my guest is Dr. Olaf Weber. He's a senior fellow here at CIGI and an associate professor at the School of Environment, Enterprise and Development at the University of Waterloo. Welcome to the program.
Hello, Andrew. Great to meet you.
Just to get everybody on the same page, what are sustainability codes of conduct and what are their purposes?
Okay, sustainability codes of conduct exists more or less for all types of industries, all kinds of business sectors. As we talk about banking mainly, there are also sustainability codes of conduct in banking. More or less these are industry standards that are voluntary, so an industry sets a standard for themselves that they want to follow, so it sets some guidelines, for example, for sustainability issues and how to deal with sustainability, how to assess sustainability risk, or how to take a sustainability opportunity. So more or less these are voluntary codes of conduct, and but on the other hand, sometimes they are also seen as a kind of soft law, because if you subscribe to them once, you should follow them.
And who is participating in or adopting these codes of conduct?
So because there are different types of codes of conduct. So I would say in the financial sector, there are very many players that have adopted a code of conduct. So for example, in the field of project finance, there is the Equator Principles for project finance that deal with social and environmental risks. And there are 83 signatories for this code, but this is about 80% of the whole volume of project finance globally. Right. So more or less everybody has signed them. UNEP FI is a more general code of conduct in the financial world. UNEP financial industry conduct. So they deal with general sustainability issues. They have about 200 to 300 signatories. PRI, Principles for Responsible Investment, are not only focusing on banks, but also on general investors, pension funds, institutional investors. They have, I think, more than 2,000 signatories. So it's not a very small thing. It's a quite broad approach, and many of the banks and financial institutions we know are signatory to at least one of these codes of conduct.
And why are they signatories, and I guess why now?
Okay, yeah, there are interesting stories about that. So if you have a look on the Equator Principles, so about 20 years ago there was a lot of pressure from NGOs against big projects with big environmental impacts. Imagine a big hydro dam where people have to be relocated, or a big chemical plant that has maybe impact on stakeholders, or a coal power plant nowadays. And so there was pressure on those that finance these projects that they should take these social and environmental issues into account. And so after some negotiation with NGOs, about 10 project financiers decided to set up this code that is connected with IFC standards for sustainability that are very prominent. And so since then, this code exists, and it has grown, and now we have about 85 members. UNEP FI, for example, came up mainly because of new environmental regulations, and banks just had to deal with environmental issues because of financial reasons. So this was a voluntary code of conduct that tried also to set up new guidelines, to do trainings, to keep the banks, to enable the banks to deal with these relatively new environmental issues at that point in time.
Right. And is there a cost to compliance with these codes of conduct? Usually
they have a small fee, but for the members this is probably not the big cost that they have to bear. But of course, once if you have signed once, you're on the radar. Right. So for the Equator Principles, each big project, so NGOs really have a look on what project financiers do, and there are examples. There's a project in Russia, Sakhalin, a gas project, where NGOs really have a look what what project financiers do, whether they really take these environmental and social issues into account, whether they really follow the guidelines. So there is a kind of cost of compliance in a way. So you should follow these guidelines once you have signed them. From a kind of pure financial perspective, we have talked to many members. That's not a big cost.
Right.
Some came up. There could maybe a disadvantage if you are a signatory and maybe a competitor isn't and can take it more easy. But on the other hand, all the signatories say usually that these environmental and social risks are really material for them. Okay. So it's not a cost to assess these risks, but it's better risk management at the end.
Right. Now, as you mentioned before, I mean, these are voluntary codes of conduct, and they're not legally binding. Is that a problem? I mean, what are some of the criticisms of this particular approach to essentially shaping corporate social responsibility?
Yes, criticism is, of course, that there's the risk of free riding, so you just sign and don't do anything or don't change anything. There was some criticism for the Principles for Responsible Investment, PRI, that even members criticized other members, that they just sign them, but they don't change anything. Right. So, and this can have a bad reputation at the end then for the voluntary code of conduct as well. For the Equator Principles as well, nowadays with the stronger effect of climate change, they are criticized that they don't take climate change into account very much. They have a certain approach to it, but it's very weak. So generally, of course, they're criticized that they are not strict enough. Right. On the other hand, you can say this is maybe the only way to get as many signatories as you can, and it's maybe better to have 85 signatories that follow maybe a bit weaker guideline than having only 10 signatories that follow a stronger, stricter guideline. So, of course, so the implementation, the compliance with these voluntary codes of conduct, that's criticized, but I think that's an effect that you can see with all kind of voluntary codes of conduct.
Shifting gears a little bit, you've written about this idea of green banking. What is green banking?
So green banking more or less has two sides. So the first side is risk management. So more or less green banking started with environmental regulations that, for example, said that you cannot just sell a property that is contaminated. Right. So a bank as a lender, maybe a commercial lender, has a loan with a commercial borrower. Maybe there's an issue, there's a default, so the bank takes the land that they used as collateral. Usually they want to sell it to get some of their money back. So if it's contaminated, you don't get any profit from that. Maybe you have even to invest in decontaminating the land. So then they started to assess these risks. So this is a part of green banking. So which sectors are more risky? What could be different types of environmental risks. The other part is the kind of opportunity side. So green banking can also be investment into the green economy. Sure. If you look on Canada, for example, now there's a need for more green economy, for renewable energy. We have a new policy here regarding climate change. So there are investment opportunities. And so this is the other part. So there's socially responsible investing, green investment, and things like that. So on the one hand, you have a risk management part. On the other hand, you have a kind of opportunity part. Yeah.
Now, China is taking a lot of leadership in this area. Why?
First, China, as we know, has significant environmental problems. So air pollution is a big problem in China. The big cities, there are real strong health effects. There are many issues with water as well, so contaminated water. Because China, of course, we know that was relied on heavy industry, on emitting industries and on polluting industries. So they have to find a way to manage that. And so, of course, they introduced also environmental regulations, but they thought that the financial sector could have a big effect, because finally investments from the financial sector are those that support the economy. Right. So the idea was to say, if we make the financial sector behaving more green. So that means reducing loans, for example, for polluting industries, and increasing loans for green industries, a green economy. Then we can influence the economy in a relatively easy way. And it's easy, of course, also because China has a different system. So the government has a quite strong impact on the financial sector and on the banking sector. There's still a kind of quota system, so they can prescribe to which sectors banks can lend. And what they do now is they say, if you do more in the green economies, you are allowed to lend more. Okay. And that's better, more business for the bank. So that's why they start to invest in green economy, issue green bonds and things like that.
And it may be too soon to tell, but is this new green banking system in China working? Is it having the desired result?
There is, of course, there is an effect. We never know exactly whether it's because of the regulation or because of the other issues. But for example, as one bank, I think it's the sixth biggest China industrial bank, they have an amount of green bonds per year of $60 billion. Wow. So that's massive. And the biggest bank in China, they have really 10,000s of clients in the green economy. So there's more lending in this field. And what we see, China, I think each year has the most renewable energy installment anywhere globally. And so there isn't development. There should be more, of course. There's still a lot of investment in polluting industries. But it seems that banks take this up, and what the Chinese government did is some years ago they also issued a kind of implementation guideline, because just having a policy and saying you have to do that doesn't solve the problem. You have to say how you do it and exactly how to implement these guidelines. And there should be reporting starting now, and then we will see what the banks really do.
And is the Chinese model something that can be replicated elsewhere in other G20 countries?
Yeah, in a way, I think, why not? Probably you don't have this central authority, but still there's certain authority. And there are other countries as well. So there, especially in emerging countries, interestingly, there is Nigeria, Bangladesh is working with such a model, going through the financial sector, Brazil as well. Okay. And there are other countries that have a maybe broader approach that, for example, for stock exchanges, that let's say stock exchange, so those that are listed in stock exchanges have to report about environmental or climate risks. So there are approaches, and currently there's the Financial Stability Board. They have a climate change task force, and they are thinking about what to do with this regard, and goes into the direction to analyze what indicators, what criteria could be used for the financial sector to assess this risk, and finally also to disclose these risks. So I think, countries or kind of G20 or other institutions should think about how to use the financial sector. And it's not only restrict them, how to use the financial sector to support the green economy. Right.
So just to wrap up, do you see green banking and then also these sustainability codes of conduct as things that are only going to become bigger over time and more mainstream over time?
Yes, I think so. If you look on socially responsible investment, 10, 15 years ago, it was really a niche. Right. In the meantime, many institutional investors have implemented this concept. So there are big pension funds. Maybe one of the most famous is the Norwegian pension funds that has installed these green principles. CalPERS, California pension fund has done that. So I think it's really becoming mainstream, and if you see the numbers as well, so Equator Principles signatories are increasing, and UNEP-FI, UNPRI as well. And so I think there's a chance that these types of risks will be implemented in kind of standard business as well. And I think also if you look into Canada, banks are doing this, and they are analyzing these environmental and social risks as well.
Thank you so much, Olaf. This has been absolutely fascinating. And thank you to our audience for tuning in. Please join us again for another episode of Inside the Issues, a CIGI Online podcast. Look for us online at cgonline.org, on Facebook, on YouTube, and on Twitter.
The equator principles for project finance that deal with social and environmental risks. And there are 83 signatories for this code, but this is about 80% of the whole volume of project finance globally. Right. So more or less everybody has signed them. UNEP FI is a more general code of conduct in the financial world. UNEP Financial Industry Conduct. So they deal with general sustainability issues. They have about 200 to 300 signatories.
What are their purposes?
Okay, sustainability codes of conduct exists more or less for all types of industries, all kinds of business sectors. As we talk about banking mainly, so there are also sustainability codes of conduct in banking. More or less these are industry standards that are voluntary, so an industry sets a standard for themselves that they want to follow. So it sets some guidelines, for example, for sustainability issues and how to deal with sustainability, how to assess sustainability risk, or how to take.
Today on Inside the Issues, I speak with Olaf Weber on the subject of sustainability codes of conduct and green banking. Hello and welcome to this week's edition of Inside the Issues, a CIGI Online podcast. My name is Dr. Andrew Thompson. I'm an adjunct assistant professor of political science at the University of Waterloo and senior fellow here at the Center for International Governance Innovation. Every week, we're joined by an expert in global governance or international public policy. And today, my guest is Dr. Olaf Weber. He's a senior fellow here at CIGI and an associate professor at the School of Environment, Enterprise and Development at the University of Waterloo. Welcome to the program.
Hello, Andrew. Great to meet you.
Just to get everybody on the same page, what are sustainability codes of conduct and
sustainability opportunities? So more or less, these are voluntary codes of conduct, and but on the other hand, sometimes they are also seen as a kind of soft law, because if you subscribe to them once, you should follow them.
And who is participating in or adopting these codes of conduct?
So because there are different types of codes of conduct. So I would say in the financial sector, there are very many players that have adopted a code of conduct. So for example, in the field of project finance, there is the